Dear student, first of all, welcome to the very first live revision class of ATX for the session December 2025. Since it is a first class, so it will not be very long at all. In today's class, we'll be just revising the basic income tax calculation. But from class 2 onwards, duration of the live revision class will increase, and it will actually increase significantly. Okay. And those students, they are unable to attend the live revision class on time, recording will be available and the recording will be uploaded on the same day. Okay. So let's start. First of all, our ATX syllabus actually it starts from individuals. So obviously we will be revising in the same, I would say, format. So today the main revision is how do we calculate income tax liability of an individual. Okay. For example, let's say employment income is assuming 60,000. Let's take it very simple. And I just need income tax liability. Income tax liability. I'm just giving 1 or 2 minutes. I want everyone to attempt this. Obviously, can I say employment income is a non-saving income? And obviously on entire 60,000, we are not going to pay income tax. We will deduct personal allowance. After deducting the personal allowance, we'll get taxable income, and income tax will be paid on that taxable income. Personal allowance is 12,570. So employment income simply 60,000. We will deduct personal allowance, and the personal allowance is 12,570. I hope everyone can see this spreadsheet, Excel. Yes or no? Quickly reply, please. That I'm not the only one who is. Okay, you can see that. That's great. Thank you. So from this employment income, I'll deduct personal allowance. So that will give us taxable income. 60,000 minus this. Okay, now we have to calculate income tax. First, basic rate band. Can I say the limit of basic rate band is 37,700. Basic rate band. It is 37,700. Applicable tax rate on non-saving income is 20%. So simply we'll take 37,700 multiply by 20%. Now, the taxable income is 47,430. So obviously, this individual is a high rate taxpayer, but we directly do not apply 40%. First, we have to utilize the basic rate band. After that, we'll go towards higher rate band. Now, obviously, higher rate band. Let's see how much falls in higher rate band. 47,430 minus the basic rate band limit. Applicable tax rate is 40%. So 9730 multiplied by 40%. So simply just add both of them, you will get income tax liability. So here comes your income tax liability. Okay, now, whenever we are required to calculate income tax liability for the individual, first we apply tax rates on non-saving income. After that, we go for saving income, and finally we go for dividend income. I'm just giving you a question. Let's say we have non-saving income. Another column I'm just taking here, that is saving income is simply the interest income. Okay. Let's say the non-saving income is 70,000. Saving income is the interest income, which is 20,000. And the required is income tax liability. Now, I'm just giving you a quick revision regarding saving income when it comes to saving income. First of all, if individual is a basic rate taxpayer, then on saving income, you get nil rate band of £1,000. If individual is a higher rate taxpayer, then on saving income, you get nil rate band of £500. If individual is an additional rate taxpayer, then on saving income, you will not get any nil rate band. Okay, so just keep these points in your mind. I really want every one of you to calculate income tax liability. I'm giving you 3 minutes. I want everyone to attempt this. 3 minutes. I'm just pausing the video, so that video should not be unnecessarily very long. But I want everyone to attempt this. No matter you're making mistakes, no issue at all. But do try. So you have 3 minutes. Let's see the answer. Students are replying. Okay, one student is saying 23,232. What about others? I really want everyone to attempt this. Okay. Okay, I'm solving it also. Another column is total. Personal allowance, of course, first we deduct the personal allowance from the non-saving income. Less personal allowance. $12,570. Let's take the total here. 70 plus 20. After deducting the personal allowance, you will get taxable income. 70,000 minus the personal allowance. Of course, this remains same. 90 minus this personal allowance. Now let us calculate income tax liability. Of course, when we apply tax rates, first we apply the tax rate of non-saving income. After that, we'll go for saving. If we had dividend income, then the number 3 is dividend income. Right now we have only two incomes. One is non-saving, another is saving. Income tax, basic rate band. Again, the limit is 37,700. But this time, it is highly advisable that you should be mentioning the source, and this is non-saving. Applicable tax rate is 20%. 37,700 multiplied by 20%. Let's see how much non-saving income falls in higher rate band. We'll take this minus 37,700. Applicable tax rate is 40%. So 19,730 multiplied by 40%. Now, students, we have to apply income tax rate on saving income. But before applying the income tax rate on saving income, we have to check for the nil rate band. By looking at taxable income in the final column, which is 77,430. Taxable income in the column of total is actually more than 37,700. So since it is more than 37,700, so this individual is a higher rate taxpayer. And whoever is a higher rate taxpayer gets nil rate band of £500 for the saving income. It means nil rate band, and we are talking about saving income. Hmm. Yes, a nil rate band for the saving income will be £500. Of course, remaining entire saving income actually falls in high rate band, and where applicable tax rate is 40%. So higher rate band, saving income. Total taxable income in the column of saving income is 20,000. Out of that 2,500 we have taken in nil rate band. Applicable tax rate is 40%. Now very easily we can calculate income tax liability. Okay. You can even use the formula of sum, which is available in exam. We will only be using the shortcuts which are available in exams. So student has given us the perfect answer, 23,232. Great. Now let me write one more question. Let's say non-saving. Okay, let's see. This time we have got dividend income as well. Okay. Non-saving is, let's say, 50,000. Saving income is 15,000. Dividend income is, let's say, 10,000. The requirement is income tax liability, the same. And we know that in case of dividend income, irrespective of individual's tax paying status, every individual gets nil rate band of £500. In case of dividend income, irrespective of their individual's tax paying status, everyone gets nil rate band of £500. I really want every one of you to calculate income tax liability. I'm giving you again 3 minutes to do it. Let me just pause the video and I want everyone to attempt this. First of all, you have to tax non-saving income, then saving, finally dividend income. So let's see. I'm just adding one more column for the total. Okay. Less personal allowance. Personal allowance is 12,570. After deducting the personal allowance, we will get taxable income. 50,000 minus the personal allowance. Okay. 75 minus this. Okay, obviously, first we have to apply tax rate on non-saving. Can I say the basic rate band is 37,700? Entire 37,430 actually falls in basic rate band. Basic rate band. Logically, entire amount falls in basic rate band. Applicable tax rate is 20%. 37,430 multiplied by this. Majority of the students, they are not here today. I don't know why. Maybe it's a first live revision class, so they know that it will not be so long. Okay, now we'll move towards saving income. But for saving income, we need to decide individual's tax paying status. Basically, whoever is a basic rate taxpayer gets nil rate band £1,000 for the saving income. If someone is a higher rate taxpayer gets nil rate band £500. In case of additional rate taxpayer does not get nil rate band. Does not get any nil rate. Look at this. By looking at 62,430, we can easily say this individual is a higher rate taxpayer. Whoever is a higher rate taxpayer gets nil rate band of £500 for the saving income. So saving nil rate band. I will take 500. Why? Because this individual, how do we decide the tax paying status? By looking at the final column, total column taxable income, which is 62,430, which is more than the limit of the basic rate band. So this individual is a, excuse me, high rate taxpayer. Whoever is a high rate taxpayer gets nil rate band of £500 for the saving income. So 0%. Now, if you just simply look at this 37,430 and nil rate band of £500, so logically basic rate band we have fully utilized. Now there's no more space in the basic rate band. Because the combined total of 37,430 and nil rate band of £500, it is more than 37,700. So logically, we do not have any space in the basic rate band. Okay, so the remaining saving income, which is 14,500, how did I get this? Because 500 I've taken in nil rate band. So remaining saving income actually falls in higher rate band. So simply higher rate band saving income. 15,000 minus 500. Higher rate band applicable tax rate for the saving income is 40%. Now we'll move towards dividend income. In case of dividend income, we know that every individual gets a nil rate band of £500 irrespective of tax paying status. So dividend nil rate band is £500. Of course, remaining dividend income, which is 9,500, falls in high rate band because basic rate band is already utilized. High rate band dividend income. It is 10,000 minus the nil rate band of 500. Student, for the dividend income, if the dividend income falls in high rate band, applicable income tax rate is 33.75%, and these tax rates will be given to you in exam. If dividend income falls in basic rate band, then applicable income tax rate is 8.75%. If dividend income falls in additional rate band, then applicable income tax rate is 39.35%. There's no need to memorize these rates. They will be given to you in exam in tax rate sheets. So applicable income tax rate is 33.75%. We'll take this. So here comes your income tax liability. We can easily use the sum formula. Anyone who has got the same answer? Can you reply, please? Anyone with the same income tax liability or no one? Students, anyone who is having the same answer? Students, I'm waiting. Yes or no, you can reply. I'm not getting any reply. Okay, only one student has replied. Let's see. Okay, one student is having the same answer. Fine. Student, now I really want this question to be attempted by everyone, and I'll be waiting for your answer. Non-saving, of course, income, saving income, dividend income. Okay. Non-saving income is 10,000. Saving income is 25,000. Dividend income is 30,000. Requirement is same, which is income tax liability, but this time I really want every one of you to attempt this. But this time, instead of 3, I'm giving you 5 minutes. But I really need answer. No matter you're making mistake, it's okay, but attempt this. If you're not attempting it, then it's a bigger mistake. So I'm giving you 5 minutes to attempt this. Let me pause the video, otherwise unnecessarily video will be very long. Okay, students, now let's try together. Let me just add one more column. Total. Okay. Personal allowance, of course, I'll deduct the personal allowance from the non-saving income first. Less personal allowance. 10,000 from here. Can I say 2570 from here? Okay. Taxable income. But you people should have tried this, seriously. 10,000 plus this, it becomes 0. 25 minus this. Okay. 65,000 plus this. Now, we need to calculate income tax liability. But a very interesting fact, If you look at the column of non-saving income, taxable income in the column of non-saving is actually zero. Okay. So now we have to start from the saving income. When it comes to saving income, first we will get starting rate band. Previously, why we were not getting starting rate band for the saving income? Because previously taxable income in the column of non-saving was more than £5,000. Right now, taxable income in the column of non-saving income is zero. So obviously, you will get starting rate band of 5,000. If the taxable income in the column of non-saving income was £2,000, then we would have taken a starting rate band of £3,000. But here, taxable income in the column of non-saving is zero. So starting rate band for the saving income is applicable, which is £5,000. So we will start from starting rate band. £5,000. Obviously, applicable rate is 0%. Now, we have to check saving income nil rate band. Okay. If you look at 52,430, this individual is having taxable income 52,430, which is more than the limit of basic rate band. So this individual is a higher rate taxpayer. Whoever is a higher rate taxpayer gets nil rate band £500 for the saving income. Okay. Now the remaining saving income, whatever is left, of course, falls in basic rate band, and applicable income tax rate is 20%. So basic rate band, saving income. Taxable saving income is 22,430. Out of that, 5,000 we have taken in starting rate band, 500 we have taken in nil rate band. This is what left, 20%. Now we'll move towards dividend income. If you recall, when it comes to dividend income, every individual gets nil rate band of £500 irrespective of their tax paying status. So dividend nil rate band is £500. Let's see, what are we getting? 0. Now, students, we have to see how much space is left in the basic rate band. The remaining space which is left in the basic rate band, applicable income tax rate for the dividend income will be 8.75%. Because the dividend income which falls in basic rate band, applicable tax rate is 8.75%. So let's see. Basic rate band, dividend income. Basic rate band limit is 37,700. We have utilized 5,000, then 500, then 16,930, and then 500. This is which is still left. Applicable income tax rate is going to be 8.75%. Now, the remaining dividend income, of course, falls in high rate band where applicable income tax rate is 33.75%. Higher rate band. Dividend income. Taxable dividend income is 30. Out of that, 500 we have taken in nil rate band and 14,770 we have taken in basic rate band. This is what falls in higher rate band. Applicable income tax rate is 33.75%. So I hope it is coming accurately. Yes. Now very easily we can calculate income tax liability. You can simply use the sum formula. Is there anyone who is having the same answer or no one? Students, you can share in the chat box. Anyone who is having the same answer? Or no one? Okay. Okay, student, I'm just writing a one very small question. Take it like a homework, I would say. Non-saving income. Dividend income. Non-saving income is 10,000. Saving income is 5. Dividend income is, I would say, 25. Okay. Non-saving is 10, saving is 5, and dividend income is 25,000. Let's try right now. I'm giving you 3 minutes to attempt this. And this is the last question of today's first live revision in class. But let me tell you one thing. You people should be mentally ready. That second live revision class, obviously, live revision class is once in a week, every Sunday. But the second live revision class, the time duration will be approximately 1.5 hour. Could be a little bit longer than that, but will not be shorter than that. And then slowly and gradually timing duration will increase for the class. It will remain once in a week, but duration will increase. So students, I'm giving you 3 minutes. Okay, let's take 5 minutes to attempt this. But I really want everyone to attempt this. Okay, let's see what income tax liability comes. I'm just adding one more column. Total 10,000 plus 5 plus 25, 40. Now let's deduct personal allowance. Of course, 10,000 from here, but now stop. We still have personal allowance, which is 2570, but according to HMRC in ATX, you can change the sequence of personal allowance if it is beneficial for you. The normal personal allowance allocation is first we utilize the personal allowance against the non-saving income, then we go for saving, and then we go for dividend income. But here, if you look at the amount of saving income, which is just 5,000, number one. Number two, if you look at the taxable income in the column of non-saving, it will be zero. Zero taxable income in the column of non-saving means entire 5,000 pounds for the starting rate band is available. Logically, the entire 5,000 saving income falls in a starting rate band. Since the entire 5,000 saving income falls in starting rate band, so in that situation, the tax planning is remaining personal allowance should not be deducted from the saving income. Now the remaining personal allowance should be deducted from the dividend income. In this way, you will be saving income tax. So this was a catch here. So we'll deduct 2570 from here. Now taxable income. $25 minus 2570, 40 minus this. So here comes starting rate band, saving income. We'll take 5,000, entire 5,000. Applicable income tax rate is 0%. For dividend income, we know that everyone gets nil rate band of £500. So dividend nil rate band. 0%. Of course, remaining dividend income falls in basic rate band, where applicable income tax rate is 8.75%. Basic rate band. Dividend income. 22,430 minus 500. Applicable income tax rate is 8.75%. So here comes your final answer. Income tax liability. Simply you can use the sum formula. This, it is 1918. So whenever you come across a scenario where entire saving income falls in a starting rate band, then personal allowance allocation sequence changes. Obviously, first non-saving income, then remaining personal allowance will be deducted from the dividend income instead of saving income. So students, this is all about a very first live revision class for December 25 session, ATX. And obviously, in the coming live revision classes, duration will increase and we will be discussing much more in-depth topics in ATX. So that is all about today's class. Is there anything if you want to ask, you can ask. And let me pause the video. So the video should not be unnecessarily very long. Any question you want to ask, you can ask. You can use your mic if you want to use. You can do